The U.S., the U.K. and Canada are among countries that have banned imports of Russian oil and energy products. Now their task is to find alternative sources of oil. For Insight, we're joined now by Matt Smith. He's lead oil analyst for the Americas with commodities research firm Kpler. He joins us from Louisville, Kentucky. Matt, thanks a lot for joining us. You make the point in a recent report that it takes time for something like a ban on imports of energy from a particular country to work its way through the marketplace. What have we seen in the days since the U.S. announced its ban?
Yeah, sure. Well, first of all, Paul, in terms of Canada takes very little products from Russia. They're very tiny, very sporadic, and so that's not a concern. It's really the U.S. side of things. So the U.S. imports sort of 500,000 barrels a day of products and crude from Russia. The majority of that is fuel oil, which is about 300,000 barrels a day of it. And so we're still seeing fuel oil on its way, continuing. We're still seeing products heading towards the US as well. And so the situation is there's this sort of 45-day wind down period. And so that's, as I mentioned, why we have this kind of time lag there. It takes time. And so that's what we're seeing. So in theory, we could still see products being loaded in Russia now and still making it within that window of the 45 days. So really, that's the situation we're in. The crude side of things look to have pretty much halted now. We've seen deliveries over the last couple of weeks now, but nothing seems on the water bound for the US. But on the product side, yes, it's still continuing.
And, of course, we have seen the U.S. approach Venezuela. The two countries have very antagonistic relations, but I guess these circumstances may change those relations. How much progress do you think has been made in talks between the U.S. and Venezuela in terms of Venezuela becoming a source for that oil that would otherwise come from Russia?
Yeah, that came out of the blue. So that really did surprise the market. But, you know, I think it's in the early stages. There's a lot to be sort of agreed upon before that actually happens. So initially, when it first came out, people were like, wow, this looks like a natural replacement for some of these Russian barrels. But it seems that could be a way off in the same way as we had, you know, some positive rhetoric about an Iran deal getting done. And that seemingly isn't going to get done for a few months now, if it is. And so these things are coming out on a daily basis because there is such uncertainty, because there is the potential for such a supply gap to be filled here. And so from the Venezuelan side of things, it kind of made sense in that a lot of that crude will go into the US Gulf. Previously, before sanctions on Venezuela, we saw about 430,000 barrels a day, something like that, going into the US Gulf. But it seems more in the immediate term, the US needs to plug fuel oil, which it will likely pull down potentially more from Canada, more from Mexico for now.
Let's talk about Canada. Canada is a major exporter of energy, crude and energy products to the United States. A lot gets made of the fact in this country that first Barack Obama and then Joe Biden killed the Keystone XL pipeline expansion project, which, if it were up and running, would be capable of supplying a lot more oil to the U.S. market. What should we be expecting now from Canada in terms of its ability to supply the U.S. with more oil?
Yeah, well, the interesting thing is what we saw, Paul, in the latest monthly data out, the EIA, which is more reliable than that weekly number. The last one was for December, and it showed that Canadian crude into the US had risen above 4 million barrels a day. So that's the first time that's happened since sort of December 2019. Now, from that vessel tracking perspective, we can see that crude because of a couple of things that happened late last year. We've seen the reversal of the Kpler pipeline, which was historically sending crude from the US Gulf north into the Midwest, and that has been reversed, and that's taking Canadian crude down now to the US Gulf. Same time as well, we saw the Enbridge Line 3 replacement being able to send more crude into the Midwest and down as well. So we're seeing higher Canadian crude imports coming into the US. We're also seeing them hitting the water. So we're seeing more out of the US Gulf. We saw that hit a record. It's a small number in terms of that 4 million barrels a day. It's about 300,000 barrels a day that are leaving the US Gulf. Well, that was in December. We've seen it around 200,000 barrels a day the last couple of months. The really interesting thing, though, is that typically that has always headed to Asia and predominantly into India. But there's currently a cargo of heavy Canadian crude that it's on its way to Ireland right now. And that seems to have been a development after the invasion of Ukraine.
Interesting. Tell us more about that shipment of Canadian oil to Ireland.
Well, sure. It's only about sort of 600,000 barrels, something like that. But it's a real development because we've never seen Canadian crude loaded in the U.S. Gulf and head to Ireland before. Typically, you see about 100,000 barrels a day, something like that, of Canadian crude going into Europe. But that's coming from the East Coast. And so it hasn't come from the Gulf before. So, we're watching all of these different developments to see what's going to happen, because even though now you're still seeing Russian crude and products loading as normal, there is this lag before we see that buying stopping and that impacting the flows. And so we're watching the US to see if we saw more exports going in there. We're starting to see that into Europe. And this Canadian cargo is definitely a new development as well. Last question.
Are the conditions right for Canada to ship more oil to the United States by rail, crude by rail?
Well, the tough thing is that the discount of WCS, the Western Canadian Select versus WTI, that really blew out back in December. And so that's why I think we saw those imports over 4 million barrels a day. That has narrowed now to about $12. And so it's going to be, it's kind of closing the window on that essentially. But there's wacky things that are going on with the different spreads. WTI, that US benchmark, has really moved to a bigger discount versus Brent, because that is the more of a European benchmark that is getting bid up. And so that may give some opportunities there. So it could happen. But at the moment, it seems that spread is holding fairly steady there.